The frontline indices, BSE Sensex and Nifty 50 staged a smart recovery and ended higher on Monday. The 30-pack index ended 153 points higher at 57,260 mark, and the Nifty reclaimed its 17,050 level. The bounce-back rally was powered by a 1% rise in Reliance Industries stock, which was among the top gainers yesterday. On the Sensex, the stock accounted for 52% of the total gains. RIL stock made a splash on the bourses after brokerages gave a thumbs up to the 21% across-the-board hike done by Reliance Jio in its prepaid plans. According to analysts at brokerage firm Jefferies, Reliance Jio's tariff hikes have brought its discount back to 13 to 20% versus Bharti Airtel in the prepaid phone segment. This, the brokerage says, should keep Jio's subscriber momentum intact, as 2G feature phone users, low-end Jio phone users and high-end Jio phone users will have to spend up to 4.4 times over a 24-month period to upgrade to Jio phone next. The brokerage has raised Jio's enterprise value by 8% to $96 billion. Back home, domestic brokerage Kotak Institutional Equities has upgraded the stock to buy from add, citing favorable risk-reward balance post the recent correction and relative sharp underperformance versus peers in telecom and retail business. That said, if one ignores RIL's performance, the overall market momentum was volatile on Monday with more sellers than buyers on Dalal Street. Market bulls are trying hard to regain composure as investors remain uncertain on whether the newly identified Omicron variant would really derail economic recoveries and the tightening plans of some central banks. Going ahead, analysts believe the overreaction to the development is over and any market fall from here on should be used to add to positions from a medium to long-term perspective. According to G. Chokalingam, founder and chief investment officer at Economics Research, the global markets overreacted without waiting for the scientific assessment of Omicron on the rate of hospitalization, death rates and efficacy of existing vaccines. Thanks to recent corrections, valuation of the domestic equity market has moderated with trailing PE of the Sensex cooling off to 26.7 from a recent peak of 30. This, he says, has made Indian markets more attractive for investors from a long-term perspective. As regards Tuesday, news flow from the new coronavirus variant is expected to keep the indices volatile today. Moreover, investors will also track infrastructure output data for October and Q2 GDP data to be released later in the day. Stocks of Zomato, IRCTC, Godrej Properties and Tata Power will be on the investor radar today due to scheduled rejig of the MSCI indices. The Standard Index India will see 7 additions and 2 deletions and will see weight changes for certain stocks such as HDFC Life and Piramal Enterprises. Overall, analysts expect India to see a net inflow of approximately $500 million with all the adjustments. Lastly, in the primary market, the initial public offer of Star Health and Allied Insurance Company will open for subscription today. Backed by ace investor Rakesh Jhunjhunwala, the company plans to raise up to 7,249 crore rupees in the price band of 870 to 900 rupees. The initial public offer will close for subscription on December 2nd, 2021. Given the company's valuation of around 5.5x FY21 market cap to GWP, which are in line with recent deals in the sector, most analysts recommend subscribing to the IPO from a long-term perspective.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.